Good morning and welcome back to another episode of Weekly Review of Indian Equity Markets. Before we head into the analysis of the market action, price action for the week, let me give the standard disclaimer that I'm not a SEBI registered investment advisor. So all the discussion that we have here, any specific instrument that we look at, whether it is stock or indices, is purely from a perspective of analyzing the price action for the week and of that particular instrument, and at no point of time it's a solicitation to buy or sell basis the conversation that we are having here or analysis we are having here. Please do reach out to your investment advisor before you take any financial decision. And thank you very much for joining me once again this week, and let's head into the discussion. So as you see on the screen, we have a Nifty 50 chart for the week, and obviously the candle for the week is negative in nature. What we see in this week, what we've seen in this week is that you know we tried to move higher, and then we had a downward pressure, but then we also saw some bit of buying activity, which ensured that the week didn't appear on a very negative, ended on a very negative note, but we definitely have a decent size sell off happening. Another important thing to note this week is the fact that previous 2-3 weeks we have tried to touch all time high. So if you see, this is the candle that made 80 edge. Then we had a downward pressure. Then this candle tried to absorb the pressure and tried to move higher, but again failed exactly at almost at the same point. I think 1 or 2 points higher. And then this week, while we tried to move higher, but we could not reach the previous levels, which is 22,140. So and also there was a downward pressure. So while there is some bit of buying that we've seen on Friday, but if you look at the size and body of the candle, it is definitely it's definitely lower than where we were last week, and there's definitely some bit of selling pressure at a higher level that is clearly noticed. Let's see this on a daily chart. So what you see on daily chart is uh, this was Monday. This was a Monday candle. We opened higher, tried to move higher, but then immediately saw pressure. Then Tuesday we again saw some bit of pressure building up, and then we some bit of downward pressure, but then we closed higher for the day, but still lower than Monday. And then Wednesday we had a decent gap up opening. I think this was on back of rally in IT, metal, pharma, all these indices, and we see a long tail here, which possibly said that we are likely to conquer the previous high. But then by end of the day we ended lower. So we opened here, which is a decent size of gap, and immediately right from the word go we started seeing selling pressure building up. So I think this is what we're talking about. Yeah. So we opened higher, and then pressure started building, and we closed the day with some element of tail. But look at the candle and volumes where they're coming. Again on Thursday we opened higher. We tried to move higher, but then we quickly gave up all the gains and we ended lower. This is also extended for two reasons. One is that Bank Nifty saw a decent correction because of the or decent size negative hit because of the RBI monetary policy. While there were no expectation of rate cuts, but the tone and language of RBI governor was fairly uh, calm and didn't give too much of reason for banks to kind of move higher. But I think what was more important there was the clear fact that you're seeing a change of leadership from private sector banks to public sector banks, and that's something which is clearly visible. I think this also is gains credibility from the fact that if this government were to come back for next 5 years, what essentially would happen is the thrust on infra will continue to increase, And with the increasing thrust on infra, it is the PSU lenders who would have advantage of trying to lend more, trying to gain market share on the corporate banking side. And with really neat and clean books that most of these guys run today, I think the possibility is far higher for these PSU banks to lend big. And that is one of the reasons why you would see a element of ecstatic purchase happening as far as PSU banks are concerned, and the overextended phase continues to move higher, keep going higher. So, so this is the bank nifty candle, and on Friday we have seen some element of upward move. But you look at the on hourly chart when you see, look at the kind of candles which got printed this week. I think since last week, downward pressure, big downward pressure, again a large downward pressure. So the sell-off is happening on fairly easily, whereas buying is not reflected. This candle also, uh, you look at so there is continuous selling happening at higher levels, which gives this does not give too much of confidence to buyers. You look at the difference in the candles here, right? In this phase, when the downward pressure happened, and then immediately the bulls took charge, and then they kept moving higher. So you have to put some kind of stop loss and go with the flow. But today the candles are more on the downward side than the upward pressure, which is not visible. Yeah, if you print a really nice and large candle here, which means we are back in the zone of buying. I think it's very clearly some element of advantage bears at this point of time, and also we saw some bit of sell-off happening in mid and small cap, which is equally important to kind of note. So let's look at what is happening in Bank Nifty, and that's a much stronger indicator of how things are panning. Okay, before we go into that, let me also try and bring in moving averages, because that would also mean so. So the first level line of defense is going to be 50-day moving average, which is 21,420, and then you have 100 DMA, which also coincides with this gap region. All right, and then we would have, this is the zone of consolidation that we may have, and then ultimately we will have 19,800, which is a test of 200 DMA. Now, if you see the gap from 50 DMA is not very far away, so a test of 50 DMA is very possible. But do we stop there? Do we go lower than that? I think what we need to look at, possibly the way structure playing out right now, is something like this. We are trying to, let us call this a consolidation mode rather than a consolidation move, rather than any kind of correction move at this point of time. But yeah, what we have printed here is a lower high, and then do we do this? And by then I think 200 DMA should also come down to this place. I think these are the levels that one should kind of keep an eye on. This is one possibility which may happen. The other one is the simple fact that if I can get the exact line path, so we are here, we move here, and then take off here. So that's also a possibility which can play out. And for as the markets open on a daily basis and they keep moving in a particular range, so one cannot rule out the possibility of either up or down happening. So this is, in my opinion, given that we have booked out of positions and we have some cash in hand. In my opinion, this is a fairly possible structure rather than what we've seen on the other side. And at least I would hope that if this plays out, it would be really nice opportunity to deploy a lot more capital in the market. So with this, I think let's not kind of run ahead of times, but just keep an eye on the structure. This is a the structure. If the structure remains intact, there is no reason why one should kind of try and take any contra positions. I think if this were to happen, the test were to happen, then what would happen is essentially your risk reward is much more in your favor. You should try a buy here. Try to buy something here with stop loss. Buy 21,145. Stop loss being 29.50. From a swing point of view, also it can give you a decent reward, because then you're talking about a 5% gain, which is definitely not bad in a market which can remain volatile for a bit. Sorry, let me just quickly make note of it. Sell 2900, 950. Yeah. So okay. So sorry. Welcome. Coming back to the point of conversation again. So now let's look at Bank Nifty. So Bank Nifty, if you see, uh, there are one thing that I have identified, or I think is playing out in Bank Nifty. A possible way to look at is, this is one stage of the Bank Nifty which got breached with a very very strong downward pressure, and just like Nifty, the downward pressure in Bank Nifty is fairly strong. I think this candle is a fairly positive candle to look at on a daily basis, while on a weekly basis we still have a candle with long tail. But from a structure point of view, on a daily basis, two things are happening. On a moving average basis, if you see, we had we had tested 200-day moving average twice here, and then we had a big snap up, and same is the case now. We are moving higher. Mm, Sorry, we are not moving higher, but there's a test of 200 DMA, another test of 200 DMA, and right at 200 DMA, we have tried to kind of take support and try to move higher. Now, what you observe here are two strong downward pressure candles, and on the upside, if you see, while there is some bit of interim upward buying pressure, but there are more candles which are kind of smaller body when there is some element of buying happening as compared to selling. I think this is something which can play out in case of Bank Nifty, is that uh, we are in this zone. We come down here, do this, and then reach. Or all said and done, we are forming some kind of pattern here. We'll have to see if this pattern holds true, or we see another round of downward pressure uh, hitting the Bank Nifty. But very clearly, this is visible in case of Bank Nifty. Let us see how this plays out. One solace is the fact that we have tested 200 EM a couple of times. So let's see if we do something like this, and if this were to happen, then the market would go complete bonkers. And that's not something which anyone is expecting at this point of time. So if that were to play out, then it's going to be a fantastic outcome for people who are still holding on to the market at this point of time. So broadly, this is the view on Nifty and Bank Nifty. Given that we've kind of spent quite a bit of time while trying to look at Nifty trade, but let's also try and quickly focus on a couple of other indices, and that we'll do on daily chart. So support, it's come down, it's taken support here. This is Nifty Metal Index. This is one of the leaders of this rally. Let's look at FMCG is printing significantly strong lower high lower low kind of candles, and it's definitely something which is a matter of concern, though the weight is not so high. Let's look at Nifty Finance. Nifty Finance structure is also not bad, again very similar to Nifty Bank, and the stage here is much more strong and clear. This is a stage that we are seeing as far as Nifty Finance is concerned, if Nifty is concerned, Pharma is doing exceptionally well, continues to remain in a upward, fairly strong upward trajectory. CNX 500 has seen did break out of this flag and now seeing some element of long wick. Body of the candle is also not so great. So this is something that we need to keep in mind. Let's combine this with what is happening in mid small cap 400. Now this is another candle which is while far away from 50 DMA, but this is not a positive candle for sure, and not that it cannot move higher on back of such kind of candle, but the fact is we have printed a ATH and have corrected sharply from there. So it's a touch and go kind of affair. So it's a perfect doji cross that we see here. Doji that we see, not doji cross. Uh, Real estate index, one of the strongest index on a weekly candle, is again forming similar structure where we have not been able to move higher, but the structure is decent. There's nothing wrong with the structure. Consumer durable, service, healthcare is doing exceptionally well, and that's something. So on this breakout, we said that there is a possibility of this kind of outcome, and almost 50-60% of that distance is covered, I guess. Yeah, more. So So obviously there is advantage PSU banks, there is advantage healthcare, and that's something that we were talking about when the leadership is changing from private sector banks to PSU banks, and this is something which is reflective in the candle of PSU banks. So this is broadly what is visible as far as Indian markets are concerned. So uh, on a daily basis, there are quite a few indices which are testing or below 50 DMA, while there are a lot of them which are still moving strong, moving fairly higher. So, Nifty small cap has printed a fairly strong downward pressure candle, though there is an element of tail here. But let's see how things pan out. I think we should also now bring in Nifty small cap 50 into the play, because that is where you will see what is happening. Energy is the leader of this rally and it's done exceptionally well. Nifty Junior has done exceptionally well. Consumption. So broadly, there are few indices which have done exceptionally well. IT continues to remain in a good structure. Uh, IT for the week has not printed a great candle after this strong candle, but it's not in it's in good shape. There is no reason to worry. In fact, it would be great if IT were to do something like this. That would be close to 7-8% correction and then move higher. That would be wonderful, and that's something which happened here as well after the breakout, right? This was a sharp downward pressure. If 10% correction, and if we see a 10% correction from here, we are almost going to touch this. For that, we don't need so much time as well. I think this could be the time. So overall, I think IT is in a good structure, pharma is in a great structure, auto, which was the leader of the entire up move, uh, has finally printed one weaker candle, and let us see how this week plays out. But you have to be little cautious of the overall market scenario, and be aware of what is happening in the market in terms of each instrument, and take positions accordingly, especially the way we have seen sell off in some mid and small cap. For me, uh, the biggest one was something like this. You don't need volumes. There is no tennis ball action here. It's just sold off in last 3 weeks. I think I was able to exit. I exited here. No, even lower. I exited here. Then we had one more opportunity to make slightly better return, but I am not complaining at all because this is not a bad outcome. So we have printed 3 weeks of strong downward pressure candles. One definitely has to be aware of what is happening in each of their holding stocks. Let's quickly review what has happened in the global markets. So Nasdaq continues to move, make strong upward move. We are heading for election there as well. SPX, another strong move. So COSPI is an interesting structure, and this is something that we envisaged a couple of weeks back. And look at the way COSPI is trying to come out of a range. And if there's an opportunity to build a position in COSPI, I would be very, very keen to look at building something. But that's not the case. UK oil is trying to, but this is the structure that we envisaged, and it looks like we are forming a VCP kind of structure. This is, no, sorry, not this one. Let's look at Russell Index. This is something that we've been, I think number 5th or 6th is when we spoke about Russell Index. Yeah. Number 6th is when we spoke about Russell Index and possibility that can play out in Russell Index. And it is contracting. And definitely there's a contraction that we are seeing here. If it takes out this, I think it's going to be extremely, extremely meaningful outcome. This is the structure. So broadly, if you look at the overall action, price action for the week, PSUs have done exceedingly well, and within PSUs, I think one standout exception for the week was State Bank of India stock. It has done. Look at the way it just kind of has taken off. So State Bank of India broke out, tested this one instead of daily, weekly candle. Let's bring in the daily candle. Tested out this region 600, 400. Now we are at 726. That's a 20% return on a large cap stock. And look at the kind of buying that we are seeing. I think it's going to be fairly interesting rally or ride from here for State Bank of India, and it's not going to end here for sure. Let's try and bring in. Make it weekly to make things look much stronger. And on a weekly chart, look at the RS compared to Nifty 500. And let's do this comparison with Nifty 50 as well. So, so if this were to be broadly considered as a stage, RS stage, we've just broken out this week. 11% gain in a week in State Bank of India is some crazy money. So with that, let me end this session. I'm sorry, this week's session is not a very smooth flowing or a straight line with quite a bit of pauses, quite a bit of check. But I was trying to kind of think of few things on the go, and which kind of caused some amount of deviation. But thank you so much for joining again. Let me quickly summarize. Nifty 50 has made a lower high while it's still in a higher low structure, but we are very close to possible test of 50 DMA, and we should wait for candles to print this week to see how the test of 50 DMA were to play out, if at all it were to play out this week, right? This followed by the fact that uh, how things would pan out in case of Bank Nifty is equally important, because I think that is where one should focus, given that Bank Nifty is now formed, has tested 200 DM a couple of times. Uh, in terms of other indices, I think what is extremely important is the way FMCG is selling off is an indication of the fact that the margin contraction continues to play in case of FMCG. Uh, Most of the mid and small caps, few of the mid and small caps have seen some element of downward pressure, and that's something which is definitely some element of caution as far as your portfolios are concerned, because if a stock corrects 15-20% in your portfolio, then it's not easy for you to hold on to such kind of stock, or it's not easy to take a call at that point of time when you see a 20% downward tick candle. It's important to be little more aware of and cautious of what's happening in the market. So with that, let me end this video, and thank you so much again for joining the session. Look forward to seeing you next week. Have a great Sunday.